Hello everyone, I am Shruti Tripathi, and in today's update, I'll explain why China's steel prices are surging this July. Let's break down what's happening in the world's largest steel market. China traditionally dominates global steel output, producing over 1,000 million tons of crude steel annually. But now, things are shifting. The China Iron and Steel Association forecasts that output's dropping about 4% in 2025, from 1,005 million tons in 2024 to 965 million tons in 2025. In fact, crude steel production for January to June 2025 already fell 3% year-on-year, down to 515 million tons. Despite the seasonal off-peak, demand is holding firm. The recent surge is closely tied to strong sentiment in steel futures. Shanghai Futures Exchange or SHFE. Rebar and HRC contracts are rising sharply as traders bet on tighter supply and fresh stimulus. As per the latest update, SHFE rebar futures jumped by $22 per ton week to $463 per ton. Hot roll coil or HRC in short, futures surged by $22 per ton week on week to $485 per ton, their highest since March. Large projects announcements like the 1.2 trillion Chinese yuan hydropower initiative are fueling optimism for future construction, led the steel demand. Export prices are also surged, with HRC export offers reaching $478 per ton, up by $20 per ton week on week. These rises have seen across the board, not just in one or two segments. Rising raw material costs are a major factor behind steel climb. Iron ore spot prices rose by $3 per ton week on week to $103 dry metric ton, supported by consistent meal demand and positive sentiments from upcoming projects. Pellet and lump premiums are both went up week on week, indicating competitive buying. Moreover, coking coal edged up by 3% week on week, with futures jumping to 11% on July 23 alone. Domestic supply is tight due to coal mine production curbs and safety inspections. The higher cost of these key inputs directly resulted in increased steel production costs and ultimately selling prices. Policy actions and global trends are also supporting higher prices. Large-scale hydropower and infrastructure projects are driving future expectations. Coal sector cracks down and production discipline are limiting the availability of both fuel and steel. The US dollar index is weaker, making Chinese steel more competitive and more attractive on global markets. So summing up, why are prices rising? The current surge in Chinese steel prices is driven by reduced crude steel output and disciplined supply, bullish futures and expectations of government stimulus, a surge in raw material prices, increased infrastructure investments, and an optimistic project pipeline, strong domestic demand and inventory rebuilding, and lastly, global currency movements improving Chinese export competitiveness. In the near term, prices are likely to stay firm or rise further. However, watch for volatility around major government meetings and China-US trade talks. Rising production and cost and positive macro expectations should keep market tight, even if some buyers resist higher export prices. How long do you think this uptrend will last? Share your thoughts in the comment section, and for more impactful market updates, don't forget to subscribe to BigMint.